what are your goals? So without knowing your goals, you won't be able to choose the right investment. So there are so many different types of investments. You have sort of stocks and shares, you have bonds, you have cash type investments, properties. There's lots and lots that you could invest in, and all of these have different features. Some have different term length, some have sort of maturity dates. Some are very high risk, some are low risk.
Mm.
And those are sort of depending on the types of investments that they are. So by choosing your goal, and that will determine the time period that you have and the likelihood that you might need the money within that time period. And that determines the risk level that you're going to go into and the type of investment and how long that needs to last for. So one of the sort of the key things that we look at if you're investing in something like stocks and shares, it's that you should never invest unless you are happy for it to be locked up for at least 5 years. Now, I say locked up, that doesn't mean that you can't access it. That could be the case of some investments. I'm not going into any sort of specific investments or assets at this point, but the general consensus would be because of the volatility in markets, and by volatility, I mean changes in the markets, changing in industries, asset prices going up and down. You wouldn't want to invest in anything that you might need in the next 5 years. And that's normally the time period that any volatility tends to settle for most investment types. For something very risky, it could still be quite volatile at that point, and you might say, "Oh, actually, I plan to buy my car in 3 years, and my money's gone down." You don't want to take a risk like that, so investment wouldn't be the best thing for a car in that scenario. However, there are lots and lots of other products that are suitable if you did want something more short term. But that's a good sort of concept to think about. So you want to think about your goal. You want to think about how long you need until you want to access that money, if at all. It could be, I want it for the long term. Let's just get it invested and see what happens. And then the concept of risk versus reward. So the more risk you take, the potential for reward is higher. So the higher risk assets that you can invest in often would give you the potential for higher reward or higher returns in the long term. And
Mm.
that's something you have to weigh up. So if you're not a risk taker or you don't have a high, what we call capacity for loss, so that
Mm.
means do you have the capacity or the ability to lose that money? Would that affect your lifestyle? Would it affect you? Of course, nobody wants to lose money or for their funds to go down. But for
Mm.
some people, it might affect their day-to-day lifestyle and their day-to-day living. And that is where you might not have a high capacity for loss, which means you shouldn't really be taking as much of a higher risk. Depends completely on everybody's situation, your goals, your scenario, everything's different for each person, and that's something that needs to be analysed carefully before the investment, which is why I'd always say, take a bit of care about what you're doing